Good morning, everyone, and welcome to Weekly Profit Talk. As the name might imply for you, we do this every single week. Every week, it's Wednesday at 8:30 Mountain Time. That is 7:30 if you're in Los Angeles, and 10:30 if you're in Florida. So 9:30 for you Chicagoans. Good morning, everyone. Hope you're all doing well. This week's topic is how to create your medical practice tax strategy for 2025. Now, I've been doing a short three-part series on taxation and how it affects your medical practice. And this is going to wrap that up. We're going to move on to another uh, more specific cash flow topic next week or something along those lines. But I want to tie this up with a pretty bow this week. Creating a medical practice tax strategy is not as hard as it sounds. And honestly, I have an idea that with a little bit of planning, you can create a tax approach that will operate in the background for you with a little bit of involvement on your part, much like your autonomic nervous system. You wake up in the morning or get up out of bed, your remarkable autonomic nervous system actually does all kinds of things that you don't have to think about. And by doing a few things with your tax strategy, you're able to set yourself up for success and actually look forward to tax season. That is a goal of any of the clients that I have in my practice. So let's talk about that a little bit. So first thing is you want to think about creating a monthly schedule for making tax deposits. And I will go into why I think that's an important idea here. There is such a thing in accounting practice called matching principle. Um, if you are matching the expenses that you have in any business, be it a medical practice or anything else, against the same time period in which you make the money that created the revenue, or excuse me, the expenses in the first place, um, then you're basically matching it uh, in a timely way. And to do that, um, I believe it's important to actually create a new separate tax savings bank account. Um, Now, the bottom line here, income taxes are an individual expense. So that's actually good news because you get better high interest high interest savings yields on individual savings accounts than you do on business, generally speaking. I can think of one business account that actually pays decently, but um, I'll reserve that for another time. So, but there are several people out there, and you can basically Google high yield savings, and the three or four of my favorites will pop up for you on the first page of results. So, choosing any one of those ought to get you in the high 3% range. If you throw an amount of money monthly into a dedicated tax savings account, nothing goes in that or out of that other than for estimated taxes. So, as you know, because we touched on this last week, you make estimated tax payments four times a year. It's quarterly, although the quarters are slightly offset. But if you're making deposits into a tax savings account on a monthly basis, then the money's there when you go to actually create the payment and make the estimated payments. You adjust that slightly upward if you have to. Let's say they had a good month in May, for example, and there's a second tax deadline coming up June 15th. You may want to throw a little bit more in at the end of May when those financials come out, first week of June or so. But the point here is this. If you are making deposits on a monthly basis, then you're not overburdening yourself with the concept of drawing the significant amounts of money out of your business on a more infrequent basis, say quarterly. Monthly is the way to go. And I have never seen the federal government has IRS direct pay, and you can pay straight out of a savings account, ACH deposit, and they don't charge anything. My state, Colorado, does charge a $1 e-check fee, and many of the states do, the 41 that have an income tax. But again, you can make payments out of a savings account, and that is the way to go. So I consider that probably a linchpin of your tax strategy. Make monthly deposits based on performance, um, and you can base your performance strictly on the most frequent recently elapsed periods. Now, maintaining your fiscal health, you want to at a bare minimum quarterly. I like to try to encourage physicians to sit down for about 15 minutes monthly and take a look at your profit and loss analysis and cash flow assessments. Um, and you want to compare your actual versus your projected income, what your budget is. So um, you should be taking a look at that at bare minimum quarterly. Owner draws versus net income per balance sheet. What that line means is that um, this is particularly important for S corporation owners. If you take more money out of a business than it makes, and that sounds kind of difficult to do, but if you think about credit cards, you realize that it is possible, but you're in a very real danger of paying an additional tax. Excess distributions from an S corporation are actually taxed a second time. It's called capital gains on excess distributions tax, and you don't want to pay it. And of course, your estimated tax liability calculation. And we believe in annualization, which simply means that you're calculating the period just elapsed based on actual performance and making your estimated payment based on that. The easy and lazy way to do that, which is to take what you paid last year, divide it by 4, and make that payment. And the current year gets some estimated tax thrown in to the United States Treasury, but it doesn't account for performance. What if you do better? Then you should be paying more in. What if you have a lousy quarter? You might not want to pay as much in. So these are some examples of why annualization, which is the calculation of your estimated tax every period, is super important. So consider upgrading to fractional CFO services. It may be time now, finally, for your practice at a certain amount of gross revenue. It is probably very likely a important step to consider bringing in a specialist and getting the kind of help with this that you should actually be getting from the outside. If you think about the allegory of medical specialties, it's fairly simple thought process here. If you're a general practitioner and somebody comes to you and they've got something very specific wrong with a localized part of the body, you're going to refer them to a specialist. Or one thing, they're going to get better care. But the other thing is, in the long run, it's a better value for the patient. So in this case, you can sit and try to make yourself cross-eyed looking at financial information, Googling things left and right, and trying to figure it all out on your own. But consider that time and money are basically a continuum, the same way space-time is. Okay, so what that means in effect is that if you're spending a bunch of your billable hours working on accounting when you should be working on your medical specialty, you're basically losing money at the gross revenue end, and that is where your net income begins. So a financial specialist can actually help you more with the kind of information you're getting from your monthly financial analysis. And there are 3 statements you should be looking at, but there are also margins, ratios, et cetera, things that a fractional CFO and business advisor can help you with. Proactive tax planning. And some of the things that we're talking about here, but we can go beyond that for many other smaller facets. Your personal life is a result of your business life, and there are things that you want to do. You're not going to want to be working past a certain age. And also, you may be thinking about exit strategy. Perhaps you don't want to work as a practice owner, get into either more, I don't know, philanthropic things, volunteering your time, or going into education, or perhaps writing. I know a lot of medical practitioners actually go into the field of authorship and actually writing about their experiences or about the information that they have. There's a lot of money that can be had in nonfiction, certainly. So fractional CFO can also help you with business growth strategies. Ongoing financial education specific to medical practices is something that we bring to the table. So that, again, you're focusing more on what you do to make the money that you make and be of the greatest service to your patients. and also scenario-based forecasting. So this takes budgeting and runs it through uh, modern 21st century software services that can actually provide a future analysis of what certain steps that you might take. Scenarios are example, let's say you're thinking about exiting in 10 years or so, or maybe even 20, and you might want to start looking at somebody that is kind of an apprentice level person that can basically take over much of the day to day that you're doing now. If you take this as a scenario, of course, that person is going to want a salary as well as benefits. And compare that versus the benefit of hiring the person, i.e., the additional revenue, other factors such as indirect costs of having additional employee, that sort of thing. These are the kind of things that we can sit and actually do outside of regular financial reporting that helps you to make informed and intelligent decisions to grow your wealth and scale your business. So, with that, I hope you found this useful this week. Certainly enjoy sharing the information. And next week, let's get into some more cash flow analysis type situations and discussions. So, if you found this useful, of course, let us know. If you'd like more information or would like to talk to me about fractional CFO services and how they can benefit your practice, we are on one of 3 different media here. You might be watching this either live on a replay on either YouTube, LinkedIn, or of course Facebook. Any one of those has a comment section. Pop help or more info or something short, but to let us know that you would be interested in talking further about how CFO services can help you in your practice. The first conversation directly with me is always free. So, with that, I hope you're having a great day so far. And this first Wednesday of May. And let's have an incredible May month. And by the way, if you do have a chance today, do something randomly kind for a stranger. So,